Hi,
everyone. Basil Chapman sitting in for Tommy O'Brien. It's my pleasure to be here. This is the Tom O'Brien Show. My usual show is the 10 o'clock Tiger. This is the Tiger Technicians Hour at 10 o'clock to 11 o'clock Eastern Time. And my service here is the Opening Call Daily Newsletter. Let me go through the numbers here. We've got the Dow down. We will have Tim Ward on at the half hour. Dow's down 312 at 42,882. And one of the reasons why I've been saying for quite a few weeks here is that I was anticipating that there would be some kind of topping action, and that's really what I was calling it, just topping action, meaning that we should start to see maybe some double tops. In this case, the Dow 44,855 back in early July, retests it within 50 points at 45,016 on the 23rd of July. At a peak D in the Chapman methodology, started to come down quite sharply. We've been short for a little while now, and we're staying short. And one of the reasons is we also have a long position, and actually a rather aggressive 3 times long from way down, much lower. But the point here is on the short term, this is a trade. And I'm anticipating that there's going to be an arching pattern. And this arching pattern is the type of thing I'll be talking about in my webinar coming up for subscribers on Tuesday, just the kind of patterns in August that we're going to be looking for. And I'm anticipating that this is one of the patterns. We've already seen it work a couple of times. And that is, we call it the dreaded H. Because if you come straight down and then you arch over and fail at a peak A or B, and take out the left side low, you can go quite a bit lower. Look, you just did it. There's an H pattern right there off the high that was made on the 23rd. It pulls back, rallies a little bit, and then fails at it. I didn't put it in. It's too messy. At a peak A, it becomes an A minus because you take it out. So this is one that might occur. You never know. But I'm using some examples, and these are the examples I'll be talking about in my webinar, of the 9-period exponential moving average. You see it was green, this line here. Let me look at the Tiger. Yeah, you can see it, Tiger TV. You can see green, and then it goes pink, and it stayed pink. And even with the rally this morning, it was still pink. And that just says that there's downside pressures. And now what you've got is you've got the 914 negative. You've got the MACD. This is the green and black, green and red lines here. Very wide, negative. The gray line here, relative strength way below the recent highs, negative. The stochastic, 42% instead of over 80%, negative. The unbalanced volume down here, negative. So that just says to me that on the shorter term, you've got a sell mode in the Dow, and that'll change if there's a break. I would say probably a close above 44,580 into the 44,600s, and I'll have to say, maybe there's a lot more strength than I anticipated. And a weekly chart has gone to a peak E, and the monthly chart hasn't yet gone beyond the 45,073 all-time high of December of 2024. Okay, with that said, the S&P. So the webinar that I should have got the thing put up here, but I didn't. The webinar is also going to deal with, for instance, the S&P. We went short the exact day of the high, right there. But we used an instrument 3 times short, a small position of the 3 times short. Now, what happens is we didn't even get close to our entry point, but because this is a vehicle that shrinks every day, when at the end of the day there's a recalculation, it means that you've got to have a very wide parameter. I didn't have a chance to change that. If it was the original, we got short the SPXS. Look, here it is, at 437. Well, the low today is, even with all of this rally that was going on overnight into the morning, 434. Our stop would have been hit, but I had raised the stop, didn't have a chance to bring it down, because I would have said, let's get it at 437. It's worth trying to stay in this position because I don't think we're going to make a new recovery high in this particular short-term period. So we got stopped out. It's okay. It's not a big deal. You're at 448 right now. We can always get back in. So the fact is that that this is the technique that I'm going to be discussing. How money management, what you can do when you're short, how you can short. You can have alternates If you consider that it's insurance, that's one thing. If you think it's a trend change, and I did it with the Dow thinking that was a trend change. The S&P was at the high, so it was only insurance. So now it could be a trend change, so we could always get in. There's always time, because I think this is the start of just a choppy sideways, lower highs and lower lows kind of move. And that's in the day, the weekly charts. Look at this, the S&P. Let me just go back there. Look at this, the S&P. Look at that. Weekly chart, it is everything strong. The stochastic's up at 94%. That's fabulous. So all I'm saying is I think this is a short-term digestive phase. If you want to go to the QQQ, you'll see it's even better. Look at this. We went to a higher high today than the comparative thing in the S&P. 574.63 was the all-time high on Friday the 31st, Thursday. And then it pulled back very sharply, and now it's come back. And today it went to within 1.5 points. It went to 573.32, and now it's pulling back. And look at this fantastic weekly chart, and the monthly charts are all broken out to all-time highs. IWM, this is different. IWM is already on the weekly chart gone to a peak D, the fourth highest peak. That's where other things can happen. And I believe this is a G. Oops, I forgot to change that. A G in the daily, look at the double top, 226.05, back around about the 7th of July, pulls back sharply, retests it around about the 23rd or so of July, 226.74 within less than a point, double top, comes back down sharply, hits the 200-period moving average, this orange line, rallies up, and now it's starting to fail. I think this, too, is going to be an arch formation. That's what I'm anticipating. It might not, but that's what I'm thinking. And we'll see if that's the case. Then I want to go to the SMHs, which are very important, which, in fact, even to this moment, are still holding up sip of tea for the throat. Sip of tea at 289.88, up 327, all-time highs 297.38. Look, it's like a little head and shoulders right there. Got to be a little careful. But the 9-period moving average has not yet crossed pink. When it does, you can see further deterioration. So this is the SMHs, the semiconductors. Where they go, the market tends to go as well. I want to go to gold. Gold right now, look at the difference. Gold is up 19 at 34.53. But look at the GDX. This is the gold minus. Look at that breakout to the upside. And then I drew in, there's a technique that I'll be discussing in my way. There's going to be so much going on in this hour-and-a-half webinar for subscribers to my opening call on Tuesday at 4 o'clock. It'll be archived at 4 to 5:30 live. We'll even have the futures open for a little bit. We'll do something with the futures. We might. But look at this. Goes right into the resistance area. Will it break out or will it still? Look, doji candle in the GDX at 57.84. I love the action. I'll be right back.